prices since January have soared by 20%, and consumers are definitely feeling the pinch at the pumps. And so too are businesses. LEAPJob, that's a Toronto-based sales recruiting firm, recently polled sales professionals in the GTA on how rising gas prices are impacting their careers. Joining us live from the TSX Broadcast Center to discuss this and more, Jeremy Miller from LEAPJob. Nice to see you, Jeremy.
You too, Ann.
Why did you conduct the survey in the first place?
We wanted to see. We were getting a lot of salespeople asking us about their gas prices or the driving expense plans in their when they're applying for new jobs. So they were starting to negotiate with us, which is a new trend. And we wanted to find out what was the real cause of this and why were they driving us so much more than they'd ever had before.
And what did you discover?
That they're really being impacted. The first thing we found was 50% of the respondents said they're reducing the number of trips they're taking in their jobs. And that's a remarkable thing for a salesperson to say, because their job's to go out and visit customers. So if they are going out and doing less trips, they're seeing less customers. They've changed their role and responsibilities in the job.
So what's the solution? I mean, there's not much we can do, I don't think, as just regular folks about the high price of oil, thus the high price at the pumps. What can we do?
The companies have to act. So if you're asking your employees to use their car for driving, then you have to compensate them fairly. One of the interesting stats we got from our survey was 65% of companies haven't updated their driving expense plans since 2006.
Wow.
So the mileage rate or the monthly car allowances, those things are 2, 3, 4 years out of date. And gas prices have gone up 20% since January, 30% since June. These things are way out of date, and they're hurting their employees.
So what is an employee then expected to do? What are their rights? And what about people who want to be employees, and for them this is a real issue?
We are sitting in a hot job market. Even though this is a slower economy, the unemployment rate's at a 33-year low. So the employees have power. They can negotiate with their current employers and say, I need a higher driving expense plan if you want me to drive. But when you're changing jobs, then you got real leverage, because if you want to hire somebody, they can command the rates that they want. But I think the other side of this is we're seeing salespeople already reduce their driving. So they're already self-regulating themselves.
Well, the ripple effect is just unbelievable. Thanks, Jeremy. Nice to see you.
You too.
You're watching CP24, 11.